Let's be honest. Has mortgage paperwork ever made you feel like you need a law degree just to get through it? Yeah, you're definitely not alone. So today, we're going to untangle that whole mess. We're decoding the big rules designed to protect you, TILA TRID. We're going to turn that mountain of paper into a clear, simple path. Let's jump in.
So here's our game plan. First, we'll talk about mortgage sticker shock and why these rules even exist. Then, we'll meet the two most important documents in the whole process. After that, we'll cover the super important deadlines, figure out what to actually look for in all that fine print, see what happens if the costs change, and finally, we'll get into the borrower's ultimate escape hatch, the right to just rethink the whole thing.
All right, so first things first, why do we even have these complicated sounding rules? Well, it's all to prevent a specific kind of homebuyer nightmare that used to be way, way too common.
I want you to picture this. You get to the closing table, you're excited, you're ready to sign the papers for your dream home, and then you see the final numbers. And they're hundreds, maybe even thousands of dollars higher than what you were told. That horrible sinking feeling, that's mortgage sticker shock. It left people feeling completely blindsided and trapped. And that is exactly where TILA TRID comes in. You can think of it as a mandatory shield against any of those last-minute financial bombshells. The whole point of the system is to give you, the consumer, clear and accurate information right from the start. The goal? The numbers you see at the beginning should be pretty darn close to the numbers you see at the end. No more surprises.
Okay, so how does the system actually prevent those surprises? Well, it gives us two official guides for this journey, the loan estimate and the closing disclosure. Let's get to know them.
You hear TILA TRID and it sounds like a bunch of alphabet soup, right? Well, it's really just a mashup of two older, separate laws. The Truth in Lending Act, TILA, and the Real Estate Settlement Procedures Act, RESPA. Before, you'd get different, often confusing forms from both. The big idea here was to just combine them into one single, streamlined process that a normal human being can actually understand.
So these two documents are basically the stars of the show. The first one is the loan estimate, or LE. Think of it like the menu at a restaurant. It shows you all the estimated prices up front. The second one is the closing disclosure, or CD, and that is the final itemized bill. The whole point of the law is to make sure that the final bill looks a whole lot like the menu you ordered.
But you know, having the right information is only half the battle. You also need it at the right time. And TILA TRID is really strict about this. It sets up a timeline, almost like a race against the clock, to make sure you have plenty of time to actually read and understand what's going on. The first magic number you gotta remember is 3. It's the first huge deadline. From the second a lender has your complete loan application, they have exactly 3 business days. That's it, 3 days to get that first crucial document, the loan estimate, out the door and to you. And here's how that all plays out on a calendar. The clock starts ticking on day 0, when you apply. The lender has to get you that loan estimate by day 3, but check out these built-in waiting periods. You can't actually close on the loan for at least 7 business days after you get the LE. And on top of that, you absolutely must receive your final numbers on the closing disclosure at least 3 business days before you sign. It's all designed to build in time for you to review and not feel rushed.
Okay, so the forms have arrived on time. Great. But what are you even looking for? Let's break down the most important numbers you'll find on these documents.
First up, the APR. Now, this is a big one, so listen close. APR is not the same as your interest rate. Your APR is the bigger, truer cost of the loan because it rolls in not just the interest, but also a bunch of lender fees and other charges. It gives you a much better apples-to-apples way to compare different loan offers.
So, if the APR is the percentage rate, the finance charge is the bottom line in cold, hard cash. This number shows you the total dollar amount you are going to pay to borrow this money over the entire life of the loan. Yeah, it's usually a pretty shocking number to look at, but it's the real, honest-to-goodness cost of your mortgage.
And now for the big what-if question. What if the final numbers on your closing disclosure are different from what was on your first loan estimate? Well, TILA TRID has very specific rules for that, and they're called tolerances.
The rules basically create 3 different buckets for all the fees. The first bucket has 0 tolerance. These are costs the lender directly controls, like their own fees or the cost of the appraisal they ordered. These costs cannot increase at closing, period. Then you have the 10% tolerance bucket. This is for third-party services the lender suggests, like title insurance. The total cost for everything in this bucket can't go up by more than 10%. And finally, there's a no-tolerance bucket. These are things you have control over, like if you choose your own inspector, or costs like prepaid interest. These can change.
So,
Does that mean the estimates are set in stone? Not quite. They are allowed to change, but, and this is a big but, only for very specific, valid reasons. We call this a changed circumstance. And it's not a loophole for the lender to fix a mistake. It's for when something legitimately changes, like you decide to change your loan type, or new info about your credit score pops up.
All right, we've arrived at the final stop, the ultimate consumer protection that's built right into the law. We're talking about the absolute right to change your mind and the serious penalties for lenders who don't follow the rules.
This is one of the most powerful tools a borrower has. It's called the right of rescission, and it's basically a federally required cooling-off period. It gives you a short window of time to completely back out of the loan, no questions asked, even after you've already signed all the closing paperwork.
Now, this is probably the most critical detail to get right, so I want you to really lock this in. This right of rescission only applies when you refinance your primary home. Let me say that again. It does not apply when you're buying a house. And why is that? Well, think about it. When you're buying, backing out at the last second could make the seller lose their sale. This right is specifically designed to protect you from making a bad loan decision on a home you already own.
So how does this 3-day clock actually work? It's pretty simple. The day you sign your closing documents is day 0. Then you get the next 3 business days, and that excludes Sundays and federal holidays, as your window to change your mind. If you want to cancel, you just have to let the lender know before midnight on that 3rd day. Okay, but what if the lender completely messes up? What if they don't give you the correct paperwork telling you about this right? Well, the penalty is huge. That little 3-day window can stretch out for up to 3 years. Just imagine the terror for a lender, knowing a borrower could just cancel a loan years down the road. It's a massive incentive for them to get this right the first time.
And of course, the law also goes after other shady stuff, like the classic bait and switch. You know what I'm talking about? When a lender advertises these amazing loan terms that aren't actually available just to get you in the door. TILA makes that stuff explicitly illegal.
So, there you have it. TILA and TRID creates this clear, transparent process for you, the borrower, which is fantastic. But it does leave us with one last question to think about. From the lender's perspective, the ones who have to manage this super complex dance of deadlines and disclosures, what do you think is their single biggest challenge in getting it right every single time? It's a complex system for sure, but now you're much better equipped to navigate it. Thanks for tuning in.